Hi, everyone. TGIF, which Ziggy tweets, thank God I found Forex Analytics. I feel that way. How about you guys? Face has been a great platform. Gotten to meet a lot of great traders and educators and analysts through inviting them to be guests here, let alone working with the team and knowing what they're thinking at my fingertips every day, especially on the weekend when I go over all the stuff and get ready for the week ahead. Hi, Brock. So, US dollar yen at the top of a monthly wedge, that would be bearish. I don't understand these 21 euro dollar futures, which is an interest rate. Used to be a huge contract. I mean, they do, 100,000 volume in front month in euro dollars. I haven't followed them. So, if they broke out to the upside, that means rates are going up. Am I reading it correctly? You can't see my charts? Oh, rates down. Oh, okay. Um, you can't see my charts because I'm showing the website. Can you see them now? Did I resume the share? How about now?
Yeah,
Good, Tom.
I know
Okay.
they
Hey, how are you, buddy?
very good, very good. Thank you.
Okay, so I tried it here early in the week on Wednesday. I would just got lucky and took it down here around 3,300. I'm trying it again. Yeah, it looks like, we came within, I think, a pip of a new high in S&Ps up here. So, it could blow again early next week, but like a lot of the guys that I work with here, I'm a big believer in partials, toe in the water, not all in, not all out, piece in, piece out. So putting a piece in, I don't have any great expectations for today, but I do believe we're in the zone. I know some people are talking 3360 as a possibility here. Well, we'll see. You can't say there's anything bearish about the week it put in, right? So an inside week, actually, because I don't think we took out last week's high. But what I'm anticipating is next week, see the 2 week, let me get rid of this. The 2 week reversal was all the way down here. And I don't think we're going to achieve 3266.90. But next week, say the market starts off higher, to have a 2 week reversal, all we're going to need is 3327. So my best guess is there's a pretty good chance for a reversal next week. So a toe in the water. If I take heat, I may put some more, sell another one. I think we're so close. I think the top is for some type of correction, not a crash, by month's end. And was talking about Euro Pound, and I interviewed V about EG. He has really sharply lower targets. I mean, they're all the way down, I think, in the 70 handles or so. But yesterday I was talking about, didn't mean to do that, um, looking for a pullback towards the 84 level for a potential buy based upon maybe we get, this was A and this is A, B, C for a B with a C to come. So I haven't put it on yet, but I'll be stalking it, looking for pullbacks or retests of this low next week. Because even if the long-term bears are right, um, I think we could at least get 85. And why not have a C wave rally back towards 86 and a half to 7.5 up here? So that's something. Okay. Yeah, everyone's yen focused, and I don't blame you. We had the breakdown followed by an inside day here. Really, you could really have a pretty tight stop, calling the breakdown 69. We're at 61. You could, if you missed it, you could have a piece on and give this breakdown a little tolerance up here. Really shouldn't close back over 70. I'm not saying you can't poke above it, maybe even trade above it, but we're not that far away from testing the breakdown if it is one. Hi, Glenn, Monica. And let's see what else. You can't say anything good about the euro, except we are starting to get some short-term divergence. See it? This might be a drive 2 here. What's the reading? Still, not ideal. I like to see the RSI above 30 on a divergence. And when you look at the weekly, I don't see a reason to buy it. Do you? Unless something amazing happens to change this weekly candle. To me, it looks like we could have new lows. Dollar had a decent week, right? Can't say anything negative about the dollar here right now either. We're starting to clear this resistance, if you're calling this a head and shoulders. So I guess we'll see next week what kind of testosterone the dollar has, but it certainly is acting okay. And let's see, what else was I going to talk about? So the gold, when you look at it on a weekly basis, we're having a negative day here, but for the week, kind of an inside candle. I don't know what to do with it. I haven't shorted it. I was leaning more towards perhaps another push to the upside if I'm right about the yen. But you have some pretty easy stops. And then silver, I was talking about yesterday that it was critical on the 4-hour. See this? And it did hold. You had a nice bounce. And now you have these moving averages compressing. So I don't see the silver as a short either unless we start taking out 1760. Let's see what the metals could do on the upside if we have risk off and that this is not the end of a pullback in the end, but just a beginning, and maybe we're heading back towards these levels. Namaste. Nostrovia. So I'm glad it's Friday. How about you guys? Except there's no more football on and I have to go get therapy because I can't just watch the impeachment trial on the weekend. Well, maybe I'll go to the beach. It's gonna be nice here in San Diego, 75. So hope everyone had a decent week. And why not try and do all you can do to have better weeks by taking advantage of this. It says that it expires the 24th. That's today. Great week. You're welcome, Mark. Face helped. Are you a subscriber? Just curious. Don't worry, I'm not going to ban you from the room. Okay. So with that great week, why don't you diversify away from yourself and sign up? Because you're only hearing the tip of the iceberg here, buddy. Okay. At least you're honest. So let me know when you do. Maybe I'll give you a free one-on-one mentoring lesson. All right, everyone. So that's a wrap for what I see this week. We leave it all on the floor every week. I know that by feeling spent. I don't believe there is. He only shows that for subscribers. Daily value, unless Blake is showing it on the second webinar during the day. You're a light? Okay. Yeah, I don't think you get that. I'll ask Blake. Blake, do light subscribers get Paulie's bias chart?
No, he puts it in the European crossover.
And that's for subscribers.
that is for subscribers. You have to
Yeah.
be a member, but if you're a light member, I believe you can listen to that webinar. I have to confirm that with Steve, but he does post it in the chat room, which obviously is for members only. So
Yeah.
yeah, so so we'll ask Steve when he comes in,
Okay, buddy.
because I think all subscribers can listen to the European crossover. I'm pretty sure of that. But again, I'm gonna have
Yes,
to.
you're correct, Blake.
Okay, yeah. So okay, Alan. So that is where you're gonna have to get it, because we don't have a place to post a bias chart. We've talked about that in the past, and maybe that's something that we can incorporate. The problem is when we and Steve
Changes all
can
the time.
well, Steve can confirm this, is trying to add plumbing to our program, because that's like a whole other feature. It's not like oh, let's just flick the switch and it's in. It's like, oh, I got to rearrange my kitchen and I'm going to put my refrigerator on the other side of my kitchen, so now I need to reroute the water lines underneath the floor to, and then I got to put tile over it. It's not like oh, let's
An
just
easy fix.
let's just plug it in and turn it on. There's a lot more to that. And we've talked about it, just because I've done a bias chart for so many years, and Paul Franco does such a great job at it too. So the best thing to do is actually listen in. So anyway,
How are you, buddy?
it's good. Friday, as I told the people during the peoples, the daily roundup webinar yesterday. I tried to buy the euro on this trend line, see when we hit the 50% retracement right at the support. I thought, yeah, we might clear this support, get a little false breakdown. I bought it at like 110.62. I sold it like I think I bought it at like 64. I don't know, somewhere around there, 62, 64. Anyway, I got out of it at when it dropped into the like low 50s, and I said, screw it, it's not going to bounce. But I look at the euro, and let me just kind of give you a long-term view. Everybody's pretty bearish the euro. Big head and shoulder pattern. The one thing there's a couple things that the euro did not have going for it yesterday. One of them was a bounce in risk. I mean, the S&P bounced off 3,300 way more aggressively than I thought. I thought we were going to get a bounce off of 3,300 if you use Forex analytics, and you got the like S&P analysis intraday yesterday. S&P is at the 3301 level, possible bounce level for the market, and that was right, not there. It was a 4-hour chart, I guess. It was a 4-hour. Wasn't the hourly? I can't remember. Anyway, because we were talking about the 3,300 levels being a bounce level. We bounced pretty aggressive, obviously very aggressively from there, and like I said, I didn't think the bounce would be that strong. So, strength in equities, weaker euro. I think a lot of people were wrong-footed. The euro have been really since the beginning of the year, and I think the Hail Mary, and this is what I said yesterday, which I believe to be true, the Hail Mary for a lot of people that were long the euro yesterday were like, well, maybe she pulls out a Riksbank and decides to, be a little bit more hawkish, come out of negative rates, or, bring the euro, rates up, or at least hint the fact that she might. And she very much just, and I say she, me and Christine Lagarde, she very much stayed in line with what the, Draghi had been doing in the past. So it's very much like a very similar handoff from Bernanke to Yellen, Draghi to Lagarde, and so the euro just sank as a result. And I think it really shook out those traders. Now, if you, like I said, longer term view, the euro's, you can see this dotted trend line. Let me go ahead and zoom this out a little bit. By the way, I had to. So I'm a little irritated. My mouse, the wheel in my mouse on my computer is not working. It stopped working, and which never happened to me ever in my lifetime of using computers. But I used to have a couple other mice around the house, and apparently I threw them all away because I couldn't find one. So I had to order one off Amazon. So it'll be here today. So if you see me come down here and do this, it's because my mouse isn't working in one direction. Don't ask me why. Anyway, it looks like we're going to come down to the 618 retracement, which comes in at 11017. And Dale was talking about a 3 drive, which could be, you know, the 1, 2, 3, even though we're seeing divergence, maybe a 3rd drive down to 110 17. That may create a bit of a bounce, but I'm going to say this: while we're below 111, I don't think there's any real reason to be, you know, trying to be long-term bullish the euro. But as I tweeted earlier, and I did tweet this, and I want to point this out. This is the U.S. dollar Swedish krona, and this is a currency that now I'm going to be a little focused on because I like playing dollar weakness. The euro obviously has its own set of issues. The Swedish krona and the Riksbank, maybe not so much because of, like I said, the Riksbank is making a little bit of change in monetary policy and their rhetoric. So you can see how we have this head and shoulder pattern, right? So if the euro does indeed get a bounce from, like, let's say the 110 level ish, the US dollar Swedish krona is hitting a 38% retracement, challenging this underside of this trend line, and we're, you know, coming back into the resistance zone, pretty big resistance zone of the previous neckline of the head and shoulder pattern. So I think that if we're going to see a dollar turn, it'll probably show up here first. So now I've got my eyes set on the US dollar Swedish krona. I want to see how it reacts up here, and you got the 200-day moving average as well. So I'm kind of focused on that right now. The US dollar Japanese yen, I closed my shorts out yesterday, you know, because I was short from up 110 20, no, 110, I don't know, I cost average somewhere up here. I closed out yesterday, made really good money on the dollar yen, and now we're retesting that, like, the breakdown point, which comes in right around the 110.60, 110.70 level. I have to point out again, this is the same story that we've been following, nothing different. The dollar yen rally is very much lacking right now. The S&Ps, if you haven't seen it, is right back to all-time highs. The dollar yen, very much lagging. We can't even take out the 38% retracement. I'm not saying that we won't take out the 38% retracement at 109.66 and maybe head up towards 109.78. That seems logical today, but the lack of upside follow through in the dollar yen is the same issue I was having with the dollar yen when it was up here. So why do I say that? Well, now I'm leaning towards being short the dollar yen. Again, I've already started in a dollar yen short already, but I want to continue to trade that on the short side because it's having the same characteristics that it had when we were trading above 110 that it's having right now. Stocks near all-time highs, NASDAQ's at all-time highs, dollar yen can't bounce. So what happens if we do have a hiccup? Now,
There's even more reason now, Blake, because it did sell off and kind of break down from some support levels. At the highs, it was a feeling. Now it's a reality.
Yeah,
right, man?
It is. It's like, wow, it's really not following through to the upside. How many people are selling yen as stocks are near all-time highs? They're like, hey, we're going to close at highs this week. Let's sell some more yen. And they're just not getting paid. And the longer they don't get paid, the more reluctant they are going to be to hold on the position. More likely they are going to be to liquidate. So I like the dollar yen. I like the fact that it's not rallying with risk. And so therefore I'm still tilted with a bearish slant right now. As long as we stay below like this 110, 20, 110, 15, somewhere in this neighborhood where this dotted line is, which is the long-term, long-term trend line. I can pull it out a little bit further, but it really, if you look at the daily chart, You can see it's just a long-term triangle trend line that's still, affecting the dollar yen. And it's not, like I said, it's not going up.
Plus
So
yields, bro.
yields are, and it's really, this is more of a bond story. Yeah. And I'm glad
Yeah.
you brought that up, Dale.
Yeah.
I mean, look at the 10-year. We are, let me pull up the 4-hour chart here. Look at the 10-year. We are threatening an upside break in bonds. That's lower yields, by the way. So, everybody's bearish bonds. Everybody's, bonds are going to come down, yields are going to go up, inflation's going to spike, blah, 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 blah. You know, and look, the bond market doesn't want to turn. I mean, I'm looking at yields right now. The 5-year is, right around break even. 10-year is slightly down. 30 years slightly down. So, the bond market, in my opinion, looks like it could actually rally. I don't know what that means for equities. Typically, you'd see bonds rally. That would be stocks coming down, but that hasn't really affected the market. But it is affecting the yen. So as bonds sit here and hold on to these gains, I think the risk is building that the yen strengthens and the dollar yen comes down, or these other yen pairs come down. One other observation I want to bring up is the cable. So the cable, we look like we are building. Let me zoom in. Excuse me. We look like we were building this like bull flag pattern, and then we had these strong UK PMIs, right? The cable ripped up into new highs and then reversed. I don't know why. I mean, other than it's the cable. But we had really strong UK PMIs overnight. It spiked us up into new highs and then we just reversed. Now that's a risk now for bulls in the pound. I think the pound, as long as the euro stays weak, the pound could drift back down towards maybe even as low as 130. But it's something to keep in mind that the price action in the cable is pretty poor today. And like I said, I don't know why. I don't know why it sold off. Maybe Stelios has a better.
I have a thought, yeah, but
yeah, maybe you have some better ideas on why it turned around. I'm just not sure. So, what do you think? I mean, any ideas there?
I think the driving force right now is next week's Brexit deadline. I mean, now that's happening, but also the Bank of England meeting. And it's all about what they're going to do, because we're just over 50-50 pricing a cut. And it's going to be, I think it's going to be volatile going into it. I wouldn't put too much weight on today's price action. I think we're going to keep getting very volatile days in terms of numbers versus economic data releases versus movement of FX. So today's PMIs were strong, like you said, but the pound rallied a little bit and then just got slammed down straight away. I think people may be getting prepared for next week, maybe betting on cuts. I mean, I don't know, but it's the main thing is we're pricing 50-50. So either way, whatever they do, the market's going to move.
Okay, well, I appreciate your observations, and what I want to give you guys also one last heads up, and thank you, Stelios, is the U.S. dollar Canadian. You can see the dollar Canadian ahead of retail sales that are coming out. The price action right now suggests that we're going to have stronger Canadian data. I gotta point out a few things here. This is the dollar Canadian, okay, and that is this big triangle, that massive triangle, broke lower. Everybody is bearish the dollar Canadian going into the end of last year, right? So it's like, okay, now we're breaking down. Now we've reversed course. The Bank of Canada seems like they're going to be a little bit more dovish, and with probably good reason. Poll has said that the data was mixed, decisively mixed, I think is the words he used. I'm like, wow, I thought the Canadian data has been just a string of really crappy data as of recently, at least missing analyst expectations. So, the dollar Canadian spiked up and we're challenging the underside of this trend line. So this big trend line. One thing that I've learned over the years is when you have a false breakdown, it usually reverses to a breakout, especially on a big long-term time frame. So one of the risks I think for the US dollar Canadian at this point is if we break back above 131, let's just call these spike highs at 131.70, we break above that, and now we are at risk of a much bigger move. Now I don't think that's going to be the case today. I think that the Canadian data is going to probably outperform. It was the holidays, and stocks are at all-time highs, so spending was probably pretty high. So we're probably going to come back through 131, but if we, or at least test 131, but if the data is weak today, the dollar Canadian's at risk of actually doing a full-on reversal. And I think you have to keep that in mind if you're long Canadian dollars. I am very skeptical about this move because this is a central bank move. Okay. And it was very, as Elliott Wave people would say, that's a very impulsive move. And so if we start getting back above like 131.70, the risk could be that we start doing a full-on reversal. And remember, the dollar Canadian is actually associated with risk. So with the weekend coming and the coronavirus not contained from what I can tell, people might be a little sketched out here. So just watch this dollar Canadian as we come in. Now, guys, I'm going to pass it over to Steve and Stelios. Good morning, gents. But I want to say that if you have not taken advantage of the Forex Analytics offer, remember, this is your last, well, we're actually extending it through the weekend. There was a request that, could we hold off until the weekend? And so we'll just hold it off for the weekend. We'll allow any stragglers to get on board, and then after that we turn off the spigot. So then you're not going to see the spigot open again until September. So if you were on the fence with Forex Analytics, you might as well take advantage of the offer for the special. After that, you'll have the trial period and normal pricing.
Hey Blake, before you go, do you know what decidedly mixed means?
I don't know what decidedly mixed means. I thought it was decidedly
double
poor.
speak. Yeah, it reminds me of of the saying, like, I'm strongly neutral.
Right.
You know what I mean?
Or when they ask me what size I am, I always say extra medium.
Yeah, unbelievable. Decidedly.
That's what happens when you get a pear-shaped body there, Stelios.
Yeah.
Okay, hey, I'll let you guys go. You guys have a great weekend. I'll see you on the week ahead video. Have a great one, guys.
You too,
You too, Blake.
All right.
Bye-bye.
Thank you, Blaker. Thank you. So how are you doing, guys?
Good.
Good, Stelio. How have you been?
It's
Good.
Friday. The weather is really nice here, so I'm very happy.
Spring early in Greece, huh?
Well, not yet, but the sunshine and 15 Celsius. Yeah, I'll take it for January.
Nice. Yeah.
Okay, so we have Canadian data in a minute. Probably a good time to mention some other data we had this morning. PMIs, services manufacturing in Germany beat expectations, but overall in the Eurozone, marginally weaker. Market took these numbers initially in a positive way, but then the euro gave back all the gains. I think this is a similar situation as with the pound. I think the ECB meeting in Lagarde, they have more weight than the slightly dovish tone has more weight than numbers like this. Obviously, unless we get a huge outlier, but for the moment, euro probably is going to remain on the back foot. And the same with sterling. We had some strong PMIs. Sterling rallied, then it just got slammed back down in anticipation of next week. And I'm happy to say that Brexit is upon us 1 week from now. So we are happy about that, aren't we, Steve?
Yeah.
I was talking to Amelia.
I'm pretty sure there's going to be new drama starting following that.
Of course.
What kind of a deal they're going to have and blah, 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 blah.
Okay, let's have a look at the numbers. We have 2 seconds. Nothing yet.
Yeah, good Canadian retail sales, 0.9 versus 0.4 expected. Core
Yeah.
retail sales weaker though, 0.2 versus 0.4 expected. We also had slightly positive revisions, plus 0.1 in both the previous readings in both in retail sales
Yes.
and core retail sales.
So for once, a Canadian number which is not really bad. So there we go.
Yeah, although
decidedly mixed, or however he said it. Yeah.
Although if you see, we had an initial like 2-3 second move higher in the Canadian, so lower in the USD CAD. You can see it here. And immediately the market reversed higher, and we are close to the highs of the day. So as it seems,
Yeah.
so far the market hasn't decided to really bid the Canadian dollar based on the improved retail sales number.
Yes, true.
Back to cable still. It's Carney's last meeting, right?
I think
That's
so.
what
Yeah.
Amelia
Yeah.
said.
Yes.
You think he's going to go out like a dove and cut?
Pull a Trichet and move rates on the last meeting.
Yeah.
You know what? He's very dovish, always has been. So I think he's capable of doing it. I don't see what has changed in the last month or two for them to cut. But there is definitely a reason to cut, in that we have Brexit happening on Friday, and it might send a positive message to the markets. Look, we're here. We're going to provide whatever accommodation is needed, to get this transition through. I mean, I don't know. I wouldn't be cutting, but I think he's very capable of doing that.
Yeah, that's
Also,
you wouldn't be cutting. That's why you have no chance of ever becoming a central banker still.
I was wondering
if the
what
first thing
time
in your
his-
mind is not cutting
Yes.
and being accommodative, sorry, you're not fit for the job.
Yes.
What time does his webinar start next month here at Forex Analytics? The Mark Carney hour.
The Mark Carney show, yes.
Yeah.
Our friend Gautam said that inflation in the UK has gone lower. Yes, it has, but remember, it was over 3% for quite a while, and they were saying, look, there's transitory periods, and for them to really start thinking, okay, inflation is low.
Now,
and
there is the secret, Stelio. When inflation spends time above target, there is absolutely no reason to discuss symmetrical inflation. So in essence, there is no reason for you to say that, okay, we had inflation over 2% for a period of time, so let's target inflation under 2% for a period of time. But when inflation has spent some time being lower than 2%, then you really need to make up for it. It's extremely important.
Immediate action, yeah.
Yes.
Yeah, I mean, theory says that, if you're spending so much time above 2%, above 3%, then it would be okay to spend some time at 1.5%. It's not, it's not 0.9 that the Eurozone inflation hit, or, it's not zero. But anyway, this is theory. In practice is very different. Obviously, the other thing I can't get my head around it. The situation in China with the virus and everything, they're isolating whole cities, millions of people, and the markets just don't care. Which, we've said it yesterday, the markets are probably thinking this is going to be again another case like SARS, where, okay, some people died, unfortunately, but the whole thing was over after a while. So,
and it is likely, to be honest, that that's going to be the
likely,
case.
But
I mean, we've seen many viruses that the world has gone nuts about in the past. I mean, from the crazy cows to whatever. And to be fairly honest, none of them has actually created an issue that affects real economic growth, right? I mean, of course, it's unfortunate, every time there is, anything that kills people, but from that to actually making a dent in economic activity, will 200, 300, 500 deaths around the globe hinder economic activity? Because let's be honest, I mean, supposedly the markets care about what affects economic performance. So can something like that actually affect economic performance? The answer is no, it can't.
Yeah.
I mean, from a human perspective, it's something very bad and unpleasant, but having to do with the economy, no, it's not going to make a difference.
Yeah, I mean, you could argue that in China you have so many cities, like tens of millions now, people who have been told to stay within the city limits.
Yeah, that is indeed going to affect economic activity.
Transportation,
yes.
And
when you have to
things,
when you have to quarantine like cities or whatever, yes, that is going to make a difference.
But let's see how that progresses. I see the progression. I'm very worried about it, but let's see.
Well,
how it goes.
just because it's something hasn't happened in a long time,
Doesn't mean it won't
almost
happen.
yeah, almost makes it seem like it's likely because it was 100 years ago when we had the Spanish flu, 1918 to 20, and it actually was part of the reason why World War I ended, because the troops were too sick to fight during that
Yeah,
pandemic.
although there is a counter argument to that. Like 100 years or so ago that you mentioned, Coach, the life expectancy of a human being was something like 60, because
Yeah.
medicine was,
Right.
so much behind what we have today. So
Right.
just to give you an idea, 200 years ago, having diarrhea is something that killed a lot of people yearly, a lot of people, because they were getting dehydrated and they
Right.
were
Oh
dying
man,
from.
you would be dead 10 times over, Steve.
So basically, the fact that it's happening less frequently also has to do with the fact that we have a much better way in treating diseases, in pinpointing immediately what's wrong, creating vaccines. So I don't
What
think that
about the other
necessarily.
two Rhea sisters, Ghana and Paya?
Okay.
Okay.
Moving on.
Well, you
moving
brought
on.
up the
Moving on to the next
Rhea. Yeah.
subject.
Maria.
Okay.
Maria. I just met a girl named Maria. Go ahead. West Side Story.
I don't have anything else to say, Steve. So
After that, I don't
we can
blame
go
you.
and have a look at some
Bringing
charts.
up diarrhea on face. Unbelievable. Anyway, Steve,
It's a
as I
medical
take a
reality.
shot
What
of
can I do?
I take a shot of Pepto Bismol. Go ahead to the charts, man.
Yeah, so to the chat. We have had, since yesterday's webinar, obviously some interesting developments. One of them is because I know that a lot of people are, closely monitoring it. I mean, it makes sense because it's the most liquid currency pair in the world. On the other hand, it doesn't make sense because, as I've said multiple times, there are much better opportunities out there. Anyhow, the Euro USD broke through 110.80, and once it did that, it immediately, produced some follow through. Of course, back in the days, producing a follow through of like 30 pips was considered to be like nothing, but nowadays it is something. So this is definitely a bearish development. The fact that we broke below 110.80. So that triggers this head and shoulders formation, which targets, we can measure it together. Magnet is acting up. Okay, so it targets down to 109. So that's one development. At the same time, which of course it's not a coincidence because they're very much inversely correlated. I mean, the euro is like 58% of the DXY. So at the same time, the DXY was breaking above 97.70, which we had indicated multiple times the importance of that as a resistance area. So that also opens up at least some upside in the DXY. So basically, positive dollar developments, based on those. The cable was somewhat late in responding. So yesterday we had a breakdown in the Euro USD, but today we seem to be forming an outside shooting star in the cable. Now that is not to say that I'm really bearish to the cable. I mean, the cable still remains above this triangle. So if I had to choose between the euro and the pound, I would definitely be more bearish the euro, based on this development. And that is why actually I yesterday shorted and opened the pattern play about that. Forex Analytics subscribers know that. Euro Kiwi, because Euro Kiwi was one of the pairs I was closely monitoring, and this is specifically the formation I was monitoring, this bear flag. If I zoom out, you can clearly see that we had quite an impulsive move lower, and the rebound higher was clearly corrective in nature. So once we broke down from this, I was triggered short, and I do think that the euro kiwi is likely on its way to producing a lower low. I mean, the very minimum target I would be looking for is 165.50. So now I have a position in the euro, but it is not against the dollar. I'd rather stay away from the euro USD because price action has remained for quite some time. Slow, choppy, overlapping, and everything I don't want to trade. Now, at the same time, you can see why I also like Euro Kiwi to the downside, because the Aussie is still holding, barely, but holding this level. The Kiwi is not only holding this corrective formation, but it is also making an attempt to perhaps breaking above this pennant. So as you see, the Euro and the Aussie and the Kiwi look totally different, right? So the Aussie remains above the bull bear line, and the Kiwi is actually looking quite bullish. So, Kiwi looking like it wants to break higher, Euro USD broke lower. So you can understand that even if I take them, one by one, why I do like Euro Kiwi to the downside. Outside the fact that, as I showed, the Euro Kiwi chart, I think shows quite a clear bearish formation that was triggered yesterday morning. If you're in the US, it was afternoon here in Europe. So that is definitely one development I wanted to discuss, the euro breaking lower. And as I've said, it's always best if you try to find something that seems weak and pair it with something that seems strong, instead of trying to play something like that is weak against weak currency, and trying to assess which one is going to be the weakest, or strong against strong, and try to figure out which of the two is going to be the strongest. So let me go through some of your questions. You said you're long Euro USD. What is your target? No, I said the exact opposite. I said that I am short the Euro Kiwi. I didn't say I'm long the Euro USD. So I have no idea how you heard that. I said that Euro USD broke down from 110.80, and I like it to the downside, but not against the dollar, but against the Kiwi. No problem. Can you have a look at the Aussie? Nice break of weekly trend line, nice pullback, but seems to be sneaky. Yeah, it seems to be sneaky, and it makes sense because, as you see here on the daily, it is still holding above the broken channel. There you go. This is the channel. We broke above it, and we're now retesting it. So, yeah, I mean, it is still barely holding this breakout trend line, but it is. So it is sneaky in the sense it might as well end up breaking down, but for the time being, it's holding. So from a risk reward perspective, I would totally understand why somebody wants to be long, because you can risk very little, and if this actually ends up producing a rebound higher, you will have an amazing risk reward ratio. Okay, as I said though, between the Aussie and the Kiwi looks much better. So if you want to be long, you should be long the Kiwi. If you want to be short, you should be long the the Aussie. That's what I think. But I wouldn't be short any of the two for the time being. Now, if the Aussie loses this level, then it also triggers a head and shoulders formation. So, you might want to consider it following that. Steve, what's your thoughts on Palladium? I'm looking to sell $100 higher. Okay, let's have a look at Palladium. Here is Palladium. Listen, the more it consolidates near the highs, the higher the chance that it is actually going to produce one last leg higher before lower. Okay, so I get it. I mean, I get why you would be looking to short on another push higher, but there is still no certainty that that's going to happen, that we're going to get another thrust higher. For the time being, we're getting rejected again and again and again from the 261.8% extension of this corrective cup and handle formation. We haven't been able to close above 2,500 despite having traded 4 of the last 6 days above it. So, if the bulls give up here, you might see a very sharp move to the downside. So I understand why you would feel even better shorting higher, but it's not sure that you're going to get that opportunity. That's my point. If you do get that opportunity, though, I do think it's going to be a good shorting opportunity. I'm still short 2/3 of a position. I'm very slightly out of the money, and I'll still wait and see what's going to happen. Is the DSI better? Yeah, the DSI has definitely improved because the DSI had reached some astronomical level like 95, if I remember right, which is something you see like, extremely rarely. Let's see where the DSI is now in Palladium. 92. Oh no, it's actually still extreme. The DSI had reached 96, which is like a reading you can see only a few times per year in any instrument. So, only a handful of times during a year you will see a reading above like 94 or below like 6 in any instrument. So, you can understand how extreme it is. And I have to say that 92 is still, very extreme. So, DSI and in essence, sentiment is definitely not reset. Definitely not reset. Status inflation has lurched lower. Oh yeah, he answered that. Market seems to be so long USD dollars. Yeah, that's the case, and it's mostly it's what I was saying. I think I mentioned that yesterday or the day before. The last pillar that is holding dollar elevated is the fact that US markets are still overperforming. So the inflows of money that go to US assets is what is still holding the US dollar afloat. So in my opinion, you can expect those two to probably fail at the same time. I mean, when this multi-year rally in stocks fails, I think you should more or less expect around the same period of time for the dollar to fail. It might do so with a little bit of a delay, because the Pavlovian response to risk off is to get a decent bid in the dollar. I would not expect that to continue, though. I mean, once US markets seem like they're really rolling over, I would expect that outflows from US stocks are going to reverse the dollar lower as well, despite risk of positions. So, initially the dollar might stay well bid in a risk of move, but if this persists, I think that both the dollar and stocks will be tanking at the same time, which many don't expect that's going to be the case, but that's what I expect. I closed short copper yesterday. What are your thoughts? Yeah, copper was a nice run lower. We are approaching confluence of supports, so I don't know if I would close my position here, but I would definitely take some profits. So in essence, I
Nice
think
trade, Guatem.
yeah. Now we're approaching the confluence of this ascending channel's trendline support with the 200 daily moving average. So, this 270 area, quite an important support area. As I said, I would take partial profits here. Now, if the reason I would take partial profits is because if we slice through this channel, I think you should expect more weakness from copper. So, I wouldn't personally, I wouldn't want to be completely out of position here. But at least taking half of it off makes 100% sense. I mean, if you sorted the channels retest, you've already made
A lot of money.
like 5.5%, which is like very, very decent, right? Very decent of a return within roughly 7-8 trading days. Not bad at all. Yeah, it was a great trade, mate.
How do I get in your hedge fund, Guatem?
If the euro represents the economical power of the eurozone, we will lose a huge chunk coming Friday. Says Ingmar. If the euro represents the economic power of the eurozone, we will lose a huge chunk coming Friday. Yeah, but wait a second. The euro was never the currency of the European Union. The euro was always the currency of eurozone. Eurozone is like the core of the European Union. So I don't think that's the case because the eurozone was never incorporating the UK economy as part of it. Now, if the general concept is yes, but eurozone is part of the European Union, and from that aspect, the European Union loses one big member, etc., etc. I will have to say that this has been priced in the markets for quite some time. So it would be weird if the market expected to price that in the moment the event happens, because don't forget that the most basic function of the market is to be a discount mechanism. So that has already been discounted for months. So I'm not saying that the euro won't move higher or lower. What I'm saying is that I believe that the euro will not move higher or lower based on Brexit. Not anymore. I mean, whatever effect that had on the euro, it has mostly transpired with what we currently know. I mean, if things dramatically changed in what we expect as a Brexit, then the market will have something new to price in. But as long as it's following the more or less predetermined path now, I think that you shouldn't expect any influence on the euro exchange rate. That's my point.
Silver flying.
Silver. Let's have a look at gold and silver since you mentioned it, Coach. Let's first have
Which also lines up with what you saw yesterday in the gold-silver ratio, because gold's still down $0.50 with silver up 23.24.
Yeah, silver is actually yesterday. Why am I not surprised by the fact that before seeing this move in silver yesterday, within a few minutes, they cleaned out some of the stops that there were here in the market in this support area. I mean, we had that spike lower because it was literally a spike, and we ended up closing the day unchanged. And today, silver is attempting to break higher from there. So not really a big surprise in my mind. And as you mentioned, Coach, the gold-silver ratio, look at this reversal lower after that spike to new highs.
So that was a good call. I can't get bearish precious metals until I want to be long U.S. dollar yen. I don't want to be, I don't want to be long U.S. dollar yen for a while.
So, I don't think anybody in the right minds wants to be long USD yen, as long as we stay so close to this multi-year trend line resistance, because there is no technical argument to want to be long being so close to such an important resistance. I mean, above that, I totally get it. But, just below it, I mean, the most basic thing,
we rebounded and couldn't even get back to the breakdown at 70.
And the most basic thing somebody learns when they start reading like the basic stuff of technical analysis is sell resistance, buy support, right? So why would you try to do the opposite? Why would you try to buy resistance?
Online Trading Academy charges $20,000 to learn that. Only they call them supply demand zones. So
which actually that's true. I mean, they are in essence supply demand zone. So it's a different name for the same thing.
So if we can come up with a new name for them, like pivots, supply demand.
Yeah, a lot of names to describe exactly the same thing, right?
It depends.
Because
good name
support resistance is the place where there is vested interest in the markets.
Oh, so I got it. Okay. Distribution levels and accumulation levels.
Exactly.
That's worth $40,000 to learn that. What do you think, huh?
Absolutely. And the more expensive we do it, the more elaborate it's going to sound, right?
Yeah. It's unbelievable. People
Why
put 20
euro
grand over
down?
there.
News were good. In my opinion, I didn't explicitly say it, but I implicitly said it. I believe that the fact that the euro is lower is simply a technical event. There were stop losses at 110.80, and once we went through that,
Okay.
those triggered, the next 50 pips lower. So I think it was more of a technical event than anything else. Keep in mind also that many people suffer from time frame disease, let's call it, meaning we've gotten used to low volatility and going down to lower time frames, and sometimes you can really get carried away by seeing like something that looks big on a 2-hour chart, on a 1-hour chart, on a 30-minute chart, on a 4-hour chart, and thinking that something huge has happened. But in the grand scheme of things, and if you look at the daily chart, right, has something really big happened? No. The euro has been mired in this period of slow movement, and in the grand scheme of things, nothing has really changed. I mean, the euro has been abysmal to trade since 2018, and it remains abysmal to trade in 2020. That's as simple as I can describe it. Gautam says Dale USD yen closed short yesterday, but I'm not going to trade short USD yen anymore. Japan is no longer running a trade surplus, and US-China trade deal means even worse dynamics to come, plus too close for comfort to China coronavirus issues. Yeah, okay, that's one point. But for example, if your point is that fundamentals matter in the short term, so that Japan no longer running a trade surplus, what can you say about the US that is running a huge and increasing by the month trade deficit, and the dollar has spent the last 2 years moving higher? So bottom line, what I'm trying to say is that we live in weird times, that what was considered an important fundamental, and what is actually an important fundamental, the market keeps ignoring, because the market is just a junkie that is looking for the next dose of narcotics, which is stimulation and monetary policy. And at some point,
Yeah.
and at some point, all of that is going to start mattering again, and it's going to play a very important role, because fundamentals can never be ignored, for a long period of time. But the market currently, I don't think it cares that much about all that.
Yeah, and I also can't get long US dollar yen until I believe the bond rally is terminated.
Yeah.
So those two asset classes will tell me.
As we were showing the other day, here is the 10-year yield breaking lower, and here's the 30-year yield, which has already broken lower since 3 days ago, which means that the rally in yields, the rally in bonds is likely not over yet, right?
Yeah,
because yields are breaking lower,
right.
So the bonds should be, and here are, for example, the 10-year treasuries. This looks to me like a corrective formation, and I think that sooner rather than later, we're probably going to be seeing this trend line resistance breaking to the upside, and seeing at least one more leg higher, so even lower yields, before we can discuss for a possibility of a larger correction lower in the bonds, so some type of a rebound in the yields. So
I
think
in March, maybe around the equinox.
Something some people like to project based on the past, etc., having to do with where to from here in time, not in price but in time. Usually, perhaps it's me, I found that assessing how fast or slowly something might develop in price in the future is not a game that is profitable. So who knows? It might be March, it might not be. I don't care that much about it. I mean, when I see a nice technical formation, I'm okay if it plays out slowly. I'm okay if it plays out quickly, even better, of course.
Well, you
but
know,
in-
Gann felt time was more important.
yeah,
than
yeah,
price.
yeah, he did.
Yeah.
He did. I disagree with him,
And
but
he did pretty good. He did well.
Oh, yeah, yeah, absolutely. But you know, if there is
For
one thing
you, yeah.
if there is one thing you and I know from experience, is that there are a lot of ways to skin a cat.
Yeah.
We've seen successful
And
traders.
why would anyone want to do that anyway?
Personally, I don't.
Skin a cat, poor little
yeah,
kitty.
I'm a cat lover, as you know. I'm
Yeah.
an animal lover in general.
Yeah, I know what kind of lover you are. All right, so any other questions for Maestro?
Let me see. Need a crisis to buy bonds. Treasuries here. You know, crisis or not, risk remains on. The DAX is at all-time highs. The US indices are pushing new all-time highs almost by the day, and the yields remain compressed, and the bonds remain very well bid.
How old are you, Guatam? If you don't mind. How old are you? Okay, perfect. You're having a midlife crisis right now. You know, though, you don't need to look for one. You're living one.
And
all right, so
I'm going to answer that last question, which is more of fundamental based. I think that was going for judging from the timestamp, that was going for Blake. Could you explain why you place more emphasis on the correlation between the S&P and USD yen and not other dollar pairs? The answer is because most of the times the stocks and risk trades oppositely from bonds, and bonds and the yen is very sensitive to what bonds are doing. So traditionally, the yen has been a risk of currency. So traditionally, and which is a correlation that has somewhat broken down lately, when we have risk off, we see at the same time stock selling off and the yen getting bid. So in essence, USD yen falling, because during times of risk off, more money flow into the yen than into the dollar. That is why Blake places quite a lot of focus in divergences between the behavior of USD yen and risk assets, to answer your question. Okay, coach, if we do you have an interview? I'm assuming you don't.
I do
right?
not. I thought you got too excited yesterday. I was going to, what was the name of that? I was going to have Stormy Daniels come in today, but I just thought you would get too excited.
Stormy is too cheap for my taste. Sorry, I don't.
Okay. All right.
Yeah.
How about the Playboy model?
Which of all? There have been like a few thousands of them.
Well, the one that our president was going out with for a while.
Not really following closely
okay.
Trump's love life. Sorry.
all right. Well, anyway, no interview. Let's see what the lineup is for next week for people that are still here. The last week of Jan. Okay, I have JM from JM Vala Trades, Leo Hormosa, Kip Harridge, your favorite bull, and Kirk Spano. We haven't heard from Kirk in a while.
I've been seeing some tweets from Kip. Kip believes that this bull market will go on for many years to come.
Yeah.
Okay.
Yeah, he's been right. And and it's not just that, he's also was long all the miners. So anyway.
No, I have to tell you, I don't disagree with everything he says. For example, keep in mind, a lot of people don't realize that. You know that the miners have overperformed the S&P by a lot during the past the past couple of years. For example, last year I think they were 40% higher, so they overperformed the S&P by a lot. So
they do.
I'm with him on that. I mean, if I was to have stock exposure, it would be on miners. End of story. Nothing else.
Oh, miners.
Yeah.
Okay.
Not only.
Okay. silver
Not
miners.
only.
Yeah.
Yeah, miners in general, and I think there is a lot of value in some of the junior ones as well.
Oh yeah,
a
they
lot of
really
value.
go.
Yeah, yeah. It's like over leveraged because they either it's like if they either fail or they perform amazingly. So it's like a very binary. So
I'm
if you
worried.
want to if you
Yeah.
want to have a portfolio of miners, it's worth making some spending some time doing some due diligence and choosing some of the juniors to put in there as well.
Anyway, this is for all the debtor countries in the world, including the U.S. 16 tons, what do you get? Another day older and you're deeper in debt. St. Peter, don't you call me, 'cause I can't go. I owe my soul to the company store. Pay the man. And don't forget, don't just count your pips, count your blessings. And you guys are a blessing to us. And you could be an even bigger blessing when you subscribe today. So let me know. And, I'll say thank you for the whole team.
Yeah, keep in mind this is the last couple of days you're going to have to subscribe and take advantage of this offer. So I really suggest you do so.
Yeah.
The vast majority of the people that have been with us have really found value here,
Hey,
and it
yeah,
would be
Brock,
nice.
is it worth the money? Brock's a member. You getting a return on your investment? Brock?
In spades, he says.
Okay. All right, guys. Have
Okay,
a great weekend.
have a wonderful
Steve.
weekend, Coach,
You too,
and
buddy.
everybody.
All right. All right. So that's it. Adios, everyone. We'll see you next week. Recharge your battery, and we'll see you. We'll kick ass next week. I have no doubts in my mind. All right. I'll see you guys Monday. Adios. Take it easy, Steve.
You too, Coach.
All right, buddy.